what happened to this £63,000 trade? Hi, it's Charlie giving you Wednesday's video. I hope you're very well. So to start off with, just a quick note, my videos here are in conjunction. They're sponsored by Tickmill, and I'll put their link into the description box at the bottom of this video. So do check out Tickmill, really good broker and worthwhile checking out. So I'll give you a link to them in there. You get extra benefits if you click through their link. Now, I don't receive anything. I don't receive any commissions or anything on that. Now, the question at hand, the euro dollar here. Now, we can see that the euro dollar has been in a reasonable trend, like the pound dollar and other currencies, for some time, going back through to the latter part of last year. And anyway, so I wanted to talk to you about this trade that I was just in just a few weeks ago, or into last week actually. And so I got into a trade here down in this zone, initiated down in this zone on the euro, then added into the trade through here. Can't remember what was going on through the pullback here. And then, of course, it took off again. Now, I hit some profit targets. I'm going to talk you through those in a moment and show you. So right away up, actually, we took a profit 1 pip from the high up here as well. So literally 1 pip from the high. So did make some money here. And so let's actually show you the screenshot that I've got. Fortunately did take a screenshot at the time. Never took a screenshot when we were at actual highs. So I'm showing this £63,000 profit at this point. So let's actually go through it. There was a fair quantity of lot size there on this account. It was actually, I trade on a few accounts, so it was a fair bit more than this in total. The open position average price was 109.14. At this point, when I took the screenshot, it was at 112.20. So it was up $83,000 or £63,000. Now, the euro dollar went higher than 112.20. I hadn't banked anything at this point, so this was obviously taken on the way up. So it went up to 112.70. Or 75. So the open profit would have been above £70,000. And there is a however here. So although I had banked some profits up here, I wanted to give the trade, as always, when you're in trades and you've got bigger targets. I still had targets which were further up, so there was no need to bank everything. And what's happened is the euro's rolled all the way over, so I've been trading stopped out on that. And so let me take that screenshot again. Where's it gone? Whereas it was sitting up at £63,000 at that point, it had been up at £70,000. I'd banked some profits, like I said, right up in this zone up here, just around 112, and then at 112.71, and then trailing stopped out on the rest. So I did bank some, but a lot of those open profits were given back, which amounted to nothing. So, all right, maybe I banked out of that in the end on that account. Somewhere I'm probably around about between £10,000 and £15,000, which was actually banked. So a lot of people would say, oh my God, how could you allow that to all come back? Well, that's why this type of trading is difficult for a lot of people, because they can't accept seeing a large open profit. Large is relative, of course. But in pips terms, it was a good run, as you can see. And a lot of people would say, well, I wouldn't allow that to happen. But you have to be careful on what you say there, because if that was the case, then you wouldn't allow even this pullback to happen. You'd just get trading stopped through here and then not get the add-ins, which ended up bringing the profits up here. Now, and of course, if you come out as soon as price is rolling over, then you're never going to be in those longer trades, those bigger trades that go a lot further. So my point is, if you want to be in high R multiple trades or risk to reward ratio trades, then you've got to accept that there are going to be trades that go in your direction only to then retrace and fall all the way back down. But there will also be trades that you will get into that will end up, of course, going to those much higher levels as well. So you need to, from a mindset perspective, prepare yourself for the fact that you're going to get into some really nice risk reward, open risk reward positions, and then sometimes, they're gonna be taken back from you as well. I would have loved to have, if with the benefit of hindsight, when it was sitting right up there and it was actually around about 70k on this account, of course I would have loved to have banked that. And but as always, I like to give you the reality of trading, and I'm not sitting here saying, look, this is how much I banked, because I didn't bank that. I took that screenshot just for educational purposes at the time. I'd already taken a screenshot when the account was up about 40,000, then deleted that one when I took this new one at 63. Never took any more because it only went that little bit higher. So that's what I like to do, is to show people the stuff that doesn't always work, because that's the stuff that I think is more important. Now, and so like I said, for me, from a personal perspective, the challenge of running trades like that and running a trade to whatever the given target is, I love that mental challenge. So once I've set the targets, that's all pretty much set in stone once all the analysis is done, and then it's just a case of running the trade, potentially adding into the trade at times as well, and building the trade up as it goes. So but if you're not ready for that, and I think that type of trading is probably, most people who are relatively new to trading, they're better off going for smaller risk to reward ratios, because the pain of seeing large open profits come back and amount to potentially nothing and just a straight break even, or even a loss, or maybe a very small profit like in my one in relative terms, then that's too painful for them. So there you go. It's a food for thought this week, that I think I keep on talking about things like the road less traveled in trading, and these are the sorts of things that for a lot of people is too painful. They can't accept the fact that in order to hold on to the bigger risk to reward ratios, that they're going to have to make sacrifices. They've got to allow their trade to breathe in and out, and if they choke it off, then they'll never get those bigger runs. That's fine, but just accept that's what you're going to do. But if you do want to have those bigger runs, you've got to accept that you're going to have to, you can't just choke it off too soon. You've got to give it some slack, which means that, of course, there are going to be those times like this one here where it just pulls back and you just get stopped out. You've been in a nice open profit and you end up with like in my example here, a smallish profit relative to where it was. Dust yourself down, move on to the next one, and you just keep doing that over and over. Follow your processes, whatever your processes are, and dust yourself down, move on to the next trade, because at some point there'll be that one that goes and goes and goes. If you try to say, well, I'm never going to allow that to happen again, you can bet your bottom dollar that next trade that you bank your profits on, what will happen? It'll go and go and go. So you need to find, only you know yourself as a trader. So you need to find that balance. So I'm not saying that you need to try and do this sort of thing, but certainly you do need to find a balance with regards to trading and going for these sorts of things. So I wanted to show you this because no doubt people might say, oh my God, how could you have allowed that to roll back? You could have trailed the stop up. Hopefully I've given you some ideas as to why I did trail my stop up, but because of the nature of adding into the trades as well and building the positions, the average entry price ended up being, what did I say, around about 109 or so. So we did trail the stops up to around about 110. Gave it enough room, but alas, it carried on coming down anyway. So there you go, little bit of food for thought for this week. By all means, if you have any comments, then do pop them into the box as usual.